Get on board, get on track, get to where you're going. And now, your EduTrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your EduTrainer and coach through our entry level into life insurance. And we're doing our series on the essentials, and today we're talking about a section of the code. I know, don't get too excited, but it's a code that you're going to need to know if you're going to play in the life insurance game, and it's called the 1035 exchange. Now, of course, we're brought to you by our sponsor, Lincoln Benefit Life, an Allstate company, and we're using Lincoln Benefit Life software in the coming week, and all throughout the rest of our series, we're going to be in and out of their proposal system. And one of the reasons why we chose Lincoln Benefit Life's proposal system is it is so user-friendly, and it's an excellent tool to teach and to learn on. If you're just coming into our business, it doesn't matter from what vocation you're coming into, you're going to need to learn how to do some proposals, and we think they have the best user-friendly software in life and annuities, and of course we're doing it for life today. Hop out to their site, www.lblsales.com/ETW. If you go out to their site, you'll come right to the homepage here, you'll hit Run Installer and download their software. That's www.lblsales.com/ETW. And remember, we're giving away our life insurance manual, and any docs you see, like the ones you'll see today, if you say, hey, I want to order that doc, I'd like to do that, just write me at thebiz@brokersalliance.com. That's the biz, THEBIZ @brokersalliance.com. I'll be happy to send it to you. And with the life insurance manual, we send you a great vocabulary, life insurance vocabulary. A lot of our students that are watching us now, people are coming to our workshops, are actually printing it off. And so they hear something I say, they look it up on the vocabulary, and it's really great. It's a really great piece. So let's get into our class today. And we're talking about tax-free policy exchanges. Notice here, I'm using the Internal Revenue Code, Section 1035. Now, the Section 1035 is an excellent tool when you're trying to exchange one life insurance policy that has cash value to another life insurance policy that has cash value. Now, it could be multiple policies as well. What I want to do is I always want to look at what can I exchange to what? And is it a like contract? Is the ownership the same? Some of these things we're going to talk about. One thing that I want you to think about, and it's a big one. This date. Now that seems like it's a long time ago. I mean, 6/21/88 seems like that's a little time. But we still see policies that are dated before this date. And if you see a policy that has cash value before 6/21/88, there are some perks still, because before that date, there was really no such thing as a MEC contract, which we're going to get into later on in the week in Friday's class. 6/21/88. When I look at that date, this is when they introduced this tax area called TAMRA. And what TAMRA did was, it basically said that we're going to start to measure whether you're putting too much money inside a life insurance contract, because life insurance is defined for indemnification scenarios. Really, the cash value buildup and accumulation and possible use of income is really only a secondary issue of supplemental cash or supplemental income. It's really not the prime reason people buy life insurance. So the government just came in and said, listen, we see a lot of people putting so much money into life insurance that there's very little death benefit involved, and we think that that's kind of like, gaming the system, so to speak. So after 6/21/88, they made rules for TAMRA. But now, if you're exchanging a contract that's before this date, it's critical to be heads up. You may be able to take that cash, drop it into a new policy, and as long as you don't add any additional premiums to that policy, you may still have the same grandfather rights will carry over to the new contract. But just a heads up, if you added new premium to that 1035, then you probably will need to have a test done by the carrier that's replacing it to find out its status, just to make sure. The odds are that you've then kind of lost the grandfather right before 6/21/88 and you're under TAMRA. So I always say, be sure, if you don't know what you're doing and you're not really sure, have the replacing company, the new company that's taking the 1035 money, always say, hey, did I do anything to my old grandfather rights? And remember, we're only talking about contracts that are dated 6/21/88. That inventory of contracts that are out there are getting smaller and smaller. I mean, we're sitting here in year 2012. That's quite a long time ago, almost 25 years. So it's really changed, but I still see them, oddly enough. So when you think about it, you want to be able to make sure, oh, is this something I want to do? Do I want to change that? And should I keep the grandfather rights? Now, on our 1035 exchange, it tells what we can exchange to. Interesting to note, and this is a big, if you're just coming into our business, if you exchange from a life insurance policy into a life insurance policy, you can 1035 that, and that's okay. You can even take a life insurance policy and exchange it into a fixed or variable annuity. That's okay. You can even 1035 a life insurance policy into a qualified long-term care contract. Wow. So all these, and the word qualified, and someday if we have time for when we do our LTC, we'll talk about that. You can exchange those into that, and I think that's a huge issue. Think about that. If you have an endowment contract, that could be like the old contracts that would endow at 65. They would have to be paid out. They matured. If you had an endowment contract, you can't exchange an endowment contract to a life insurance contract. You can exchange it to another one, proviso that they're like maturity dates, and you could exchange it to an annuity, fixed or variable, and you could also change it to, or exchange it to a qualified long-term care contract. Now, why do we care about the exchange as we're going through this little bit of a gauntlet? We care about the exchange because if there was gain in the prior contract and we were allowed to exchange it and bring it over to the new contract, there's no taxable event. The client's not touching the money. We're exchanging from one carrier to another carrier. That 1035 exchange, or the IRC section 1035, allows us to make that exchange, and it's a good one. Now remember, sometimes if you don't even have gain in it and it's just basis, you may still want to exchange it. You're saying, well, there's no reason. I just have basis. There's not a taxable event. But you may want to carry forward basis from the old contract to the new. Always check in with your tax advisor to make sure, and of course the receiving carrier, just to make sure you can do what I'm saying and that it's proper. But you still want to exchange it, I think, because you want to carry forward basis into the new contract. So just think about that when you're doing it. That's a really important idea. Annuity contract. Well, you could exchange an annuity contract. Could you exchange annuity contract into a life insurance contract? Answer, no. That's one of the big things that newbies, when they're coming into our business, new people coming in, they always ask this question: I have an annuity contract, can I exchange it into life? And the answer is absolutely not. Can you exchange it into an endowment policy? No, you cannot. And can you exchange it, though, into another annuity, fixed or variable? The answer is yes, you can. And to qualify for long-term care, can I exchange it? And you can. Again, remember, you can order this at thebiz at brokersalliance.com. You don't have to take copious notes. We'll send it to you. Just call me, just write me, thebiz at brokersalliance.com, and I'll send it to you. And then qualified long-term care contracts cannot go in 1035 to life, cannot 1035 into endowment contracts, cannot in 1035 into any annuity, and only to other qualified long-term care contracts. Key points. Let's walk through some of these because these are really essential. And again, you can order this and we'll send it to you. Life policies must be on the same person. If I have a policy on myself and I have a policy on my wife and they're both individual, I can't send them to a new policy and commingle the funds. They're two different insureds. Now remember, you could have the same owner. I could have owned both of those, but the insureds are making the call. Remember, the insureds are, what can I do to consolidate contracts? Are they all the same insured? Ownership is a whole different issue. Ownership is if there's any taxable event, anything like that, the owner is going to bear the brunt of those issues. That's why I love doing exchanges, because I take that off the table immediately, because again, 1035 exchanges are tax-free exchanges, completely under the code, and they're built, the code was built just to do this kind of exchange. So life policies must be on the same life of the same person. Annuity contracts must be payable to the same person as well. Although we're talking about life, this actually addresses both. The cost basis of the old policy, including certain riders and or ratings, is carried over to the new policy. So you may have riders. You may have some kind of a rating on the policy. Maybe your client was sick, he had a table B. This is all going forward to the new policy. It says if cash or other property is part of the exchange, any gain will be recognized up to that amount. So it's important when I get from the existing carrier, I need to get what was the original basis that they started at. And hopefully I have that. Remember, some of these policies are so old that I've looked at that it's been already exchanged 2 or 3 times. No one truly knows what the basis is. There's not enough paper trail. Today, I wouldn't say we've eliminated it, but we've really conquered this area, and I think it's a lot better than it used to be. So I always want to make the existing carrier, bring it forward, and when you do, I need them to tell me, as the agent, what is the basis involved in this before I exchange it to the new contract I'm recommending. It says if a permanent policy with an outstanding loan can be exchanged with another similar policy with the same indebtedness. Now, you could consolidate on 1035. You have cash value, but maybe the client took some loans out as well. Now, I'm going to exclude whole life from this part of my segment. You have to bring over the entire cash value from a life insurance policy to another one. If it has policy loans, you have to also take the policy loan or the indebtedness to the new policy. Now, not all carriers work well with taking on policy loans under their new contracts. And remember, in 1035 exchanges, some carriers actually limit first-year deposits. So you heads up, before you choose one carrier, make sure, can they absorb your 1035? So some people say, well, if it's a new money and it's lump sum, no, we can only take 6 times the value of the target premium. Some other people may say, no, we'll take the whole thing, it's not a problem. Every carrier is different right now, and you need to make sure that you check in with them. When I go ahead and do this, I have to take the loans, and some people, remember, the old technology of existing may not have zero net cost loans in the contract, where many of their carriers, like in this case, Lincoln Benefit, actually has a zero net cost loan guaranteed in some of their contracts, which is huge for when you're exchanging one policy loan to another because you just left the expenses of that policy with the old contract. That's another reason to do an exchange. That's a big reason to do a policy review. Now remember, one of the things we're looking for always is questions to consider because we're going to have to deal with certain issues that you're going to have to always consider before you go forward. Determine whether the incontestability period and suicide provisions are based on the issue date of the new policy or the old one. You'll need to consider the rating of the new company. Remember, we don't want to put our client in a bad situation where the carrier is declining in their ratings. We want to determine whether the old policy has favorable tax status, and we want to make sure that we maintain it, or maybe we shouldn't transfer the policy. These are all considerations that I always review. We want to also determine whether the premium on the new policy will be more expensive. This may happen, for example, because of changes in health. Now, I like to exchange from a health category of, let's say in my case, maybe preferred to super preferred. My goal is. And I don't know if the year's difference between the time it was issued with the old policy and the time it's issued with the new policy, will I be able to overcome that with 2 upgrades in health. But many times, the shorter the time that the exchange, especially in term, I can usually upgrade the client's health condition, bringing the premium down. If I'm doing a 1035 on the permanent side, depending upon what carrier and what guaranteed chassis I'm sitting on, it really can make a difference because whether you're using guaranteed UL, whole life, index, variable, all those different types of permanent platforms are going to be the kind of contracts that we're going to exchange from one policy to another if they have cash value. So I want to look at all these considerations all the time, the contestability period, and again, this is all in your vocabulary, the suicide provisions based on the date of the new policy and the old one. I also want to consider the rating of the company, determine if the old policy has any tax favored or tax advantages to it. I want to look at that, and of course we do that for you. If you need to look at that, we'll do a policy review and tell you what we should do going forward, and always determine whether the premium of the new policy will be more expensive. I mean, why do it if we're going to have to pay more? There has to be real legitimate economic reasons to make the exchange. That's 1035 exchange, part of the essentials.
This has been an Edutrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.